should have started now. So I will give the floor to you, Morgan. I will let you give an introduction.
Perfect. Hello, everyone, and welcome to our second event of this year after our New Year's reception from last January. We would like to thank you for taking the time for this interesting seminar that will be given to us by Iberi, a financial service company specialized in international payments and finance. But before we start with the event of the day, the BMBC would like to make you aware that from next week, you will be able to apply for a new membership for the Chamber. And further, we would also like to announce our next event together with the Holland House Mexico around Women's Day on the 14th of March 2023, so stay tuned. Today, Iberi, who is one of the largest currency transaction platforms for internationally operating companies, will talk about the Mexican euro and Mexican US dollar currency exchange rate and its projections, as well as how you can protect your investments against those unforeseeable changes. I will now give the floor to Emile and Jonathan, consultants at the Iberi Belgium, who will talk more in depth about the subject.
Thank you, Morgan. I think we had some technical difficulty, like with our big screen, so I took it on my laptop. Thank you, everyone, for joining us for this webinar, and of course, thank you, Morgan and Kathleen, for this invitation. So I will briefly. Everyone can see my presentation? Normally you should see it on your screen. So the overview is I'm gonna give a small introduction of Iberi Partners. It's gonna be small, just to explain why we are having this expertise, and then we try to tackle different topics related to cross-border payments. We try to make it as inclusive as possible, importer, exporters, for companies who have entities in Mexico, or Mexican companies that want to sell abroad. And then Emile is going to finish our webinar with the market expectation, what we believe is an impact for the Mexican peso, and also for the Mexican you're joining again, but just we're gonna okay. Yeah, sorry, we're back on the big screen. So just a brief who Iberi is. Some of you know us, but just to clarify a little bit, so we are a broker, actually, a foreign exchange broker. So our core business is actually the exchange of currencies, and we have actually the ambition to support companies worldwide in their international payments on 4 pillars, actually. The first one being the exchange of different currencies, going from the standard currencies to more exotic currencies, and we try also always to be as competitive as possible on those currencies. But besides that, we also have a risk management assets. This is also a big focus for us to support companies for that budget rates and how they can manage the risk related with working with other currencies. We also have a cash management pillar by opening bank accounts for our clients worldwide, so that they can manage their different exposures and different markets through only one partner. And then at least we also have, of course, the transactions themselves. That we're also a payment institution, and we try to make those payments cheaper and faster by working with local partners. So today we're present in 21 countries. We're not present yet in Mexico, but this will come. It's on our roadmap for this year or next year. And also maybe not important to mention, we're backed by Banco Santander, which gives us actually institutional backbone, of course, because we are a fintech, we're flexible, but we also have that expertise coming from our shareholder. So here you see a small map where we're coming from. So we are present in all time zones, as I like to say, but our main focus, of course, is Europe, because we grow from the European continent. But this gives us actually, the possibility to have services worldwide. And I hope Mexico will be in light blue the next time that maybe we're invited to the BMBC. So this just briefly who we are. Let's tackle down the subject first. So the different costs that are related to cross-border payments. I think most of you know them. So at first we have the conversion fee. Every time we work with another currency, of course, there is a cost related to it. When we go on holiday, we see that as well. So it's not different for a company, of course. Then we have the transaction fees. They're always related to sending funds abroad. The transaction fee can also be applied on just the same currency, so it doesn't need to have another currency in the story. And then, of course, last but definitely not least in those times, the exchange risk that is related by working in another market, by working with another currency. We'll dig a little bit deeper on that. So, someone else joining. So the first topic, the conversion fee. I think most of you realize that, but we have the interbank rate, as we can say that. That's the rate that banks are going to apply between themselves to exchange currencies, for example, euro to dollar or dollar to euro. And that rate is actually not the rate that anyone is going to get except the banks. Even we have really good conditions on those exchange rate, but we don't have the interbank rate. And for companies, it's exactly the same. This depends on the conditions that you have or the relationship that you have with your bank. It depends if you can play different banks against themselves, and that way you can have actually the best or the closest rates to that interbank rates. And here it's also important to note that there are big differences on countries because some countries the banks are more competitive than in other countries. For example, in Belgium we like to say that we pay a lot of taxes, but we have a lot of banks for a small country. And this brings the fact that their services, for example, on the conversion fee, are quite competitive, and most of the time, more favorable than what we can see in more exotic countries like in Africa, in Asia, or even in Central America, like Mexico. This can also most of the time be less favorable than the conditions that we see here in Belgium on the exchange rates. Of course, as well, the transaction cost, but also the cost of delays of the payments. As you all know, when you send funds worldwide or when you receive funds from abroad, there are always going to be costs related to that. It's sometimes a black box. You don't know how much you're gonna receive. Depending on the fee structure, shared or Bene. You also have differences in the amount that you need to send, or in the amount that you will receive, or in the amount that you will have to pay for that transaction. And this most of the time has to do with the fact that transaction has always have to go through different banks to arrive at their destination, and those banks are gonna take a fee to process that payment. I know it sounds a little bit absurd in this digital world, but believe me, the method that the payments happen in banks is sometimes outdated, as like you say. This is why we see that digital brokers like eBay, but I'm also thinking about Wise or about Revolut, for example, that's quite famous in Europe. They work on other methods. Most of the time, the transaction fees are fixed, so that way you always know how much there is, so it's less of a black box. Or they even don't count any transaction fees because they think this is more it's a more transparent way of working. And most of the time, those partners, those brokers are gonna do the payments locally, and this avoids this stream of different banks where the payment has to go through and go from one place to the other place immediately by doing those payments locally. This removes a lot of fees, but also enhances the speed of the transaction, because you can believe if 4 banks have to proceed your payment, well, it's going to be way slower than if you can do it locally on the payment schemes. For example, in Europe, we have the SEPA payment scheme, which is an instant payment scheme where a euro transaction can go instantly between them. You have the same, for example, in America, it's the ACH. And this also, enhances the speed of the payment, of course. So this is also a thing of thinking about, because fees look always small on the transactions, but they can go up on yearly basis. Sometimes we do the exercises with our clients, and it goes up to 50,000, 60,000 euros a year just on transaction fees, which is a little bit, too much for this small thing, actually, that is transaction fees. And then, like I said earlier, the exchange risk is also a big risk. When you work with another currency, you have to think about in which currency should you budget, of course, your profits, your costs, which exchange rate should you use, the moment of payment, or the moment that you're gonna give the price to your clients. And this is also a big part of the risk. And here I have just a small example to highlight the importance, actually, of those exchange risk on profit margin. So let's take a simple example of a travel agency called Dollar Trip. They organize, for example, their first travel to Mexico. Let's say it's a Belgian company. They organize a trip for 20 people to Mexico. They start planning it in March 2022. They calculate the cost that they budgeted, and they think it's going to cost 2 million Mexican pesos. So it's a high-end travel. And the exchange rate in January 2022, when they start calculating this and organizing this travel, is around 23 euro MXN. So they budget, okay, the total cost of the travel is 87,000 euros. So we want to have a budget of 30,000 euros. So they sell their travel for 100,000 euros here in Belgium to their Belgian customers. But the trip, of course, is not happening immediately in March 2022, but only in May 2023, so 1 year later. But the payments are going to start to be due in February 2023 to accommodations, hotels, etc. So fast forward a year later, of course, the exchange rate is not a fixed concept, like you all know. And a year later, the rate moves actually in their disadvantage. The Euro MXN in February 2023, when they have to start doing their payments, is around 20. So they calculated that the costs that they budgeted were around 2 million Mexican peso. It used to be 87,000 euro, but today it's 100,000 euro. Well, I mean, not today, but in February 2023, 100,000 euros. That way, their budgeted profit margin of 30,000 euros is evaporated. They lost everything. So it's just the funds that they receive from their clients is only covering the costs they had. Of course, this is a small, easy example to show that a budget that you can make upfront is only a snapshot, where an exchange rate is always going to fluctuate, sometimes in the favor of the companies, but also in the disfavor or the disadvantage of the companies. And you can think about three scenarios. So you work on spot. So spot is you buy or you sell a currency on a given time when you need to make a payment. Then you're gonna be fully you're gonna take the full exchange risk on you. It's 100%. So this is when we hear you lose some, you win some. Hopefully you win more than you lose. But there is also another option. Of course, we could say, well, at the moment that this travel agency receives the euros of their clients, they could already immediately convert them to Mexican peso, keep the Mexican peso on their bank account, and the year that they need to make the payments, they just use those Mexican peso. This is also a method. I mean, the exchange risk is removed entirely, but it's also creating a big pressure on liquidity. And as we know, liquidity is scarce for companies. It's not something that is always at hand. So this is a method, but maybe not the most efficient. And then, yeah, of course, I think the most efficient way of working is through hedging to a forward contract. I know for a fact that some of you already work with that, but this is also removing all the exchange risk. Plus, there are no pressures on liquidity because you don't need to block any funds at the moment that you block this rate. So just to dig a little bit deeper in what a forward contract is for the one that don't use it today. So a hedging is just a way to manage your foreign exchange risk over a given period. This could be a quarter, this could be a month, this could be a year, this could be several years if you work project related, for example. And it gives the ability to a company to fix their exchange rates, and thus at the moment that they need to buy a currency or sell a currency, they can do that at that predetermined exchange rates, giving them actually the flexibility to use that contract when they need to, but also of course protect their profit margins that could be impacted by the fluctuations of the exchange rate, of course. So I don't know if anyone has a question about this part of the presentation before I dig deeper in the advantages of local currencies. Okay, well, perfect. I'll just go on. So the advantages of local currencies, you can see it from the side of an importer or the side of an exporter. So I'm first going to start with the example of a company importing from Mexico. Sometimes I hear like from companies, yeah, we don't have any exchange risk because we pay our Mexican supplier in euro, for example. But the thing is, there are always two sides in a relationship. There's the side of the supplier and the side of the client. If the client pays in euro to a Mexican supplier, well, the exchange risk will exist because the supplier will have to convert the euros back to Mexican peso most of the time, because yeah, they have to pay their employees in Mexican peso, their taxes in Mexican peso. So the exchange risk always exists and persists in a relationship where where there are two countries involved with different currencies. Most of the time, and it's still like that today, the dollar is still a really dominant currency in everything that's international related. I think in South America and Africa, especially as well. So there we can say that working with the local currency could be really interesting because we avoid the extra step of the dollar. We avoid that double conversion. And who says double conversion and extra step also says that different costs are involved, double costs are involved, if you can say so. So by removing that, we can remove those double costs where only the banks are actually winning on that, right? So also, if we work in the hard currencies, the prices most of the time will be adjusted to market fluctuations. We saw this quite a lot in the last years, where we saw, of course, price fluctuations and price adaptations coming from suppliers based upon the raw materials that became more expensive, but also nonetheless the fluctuations, of course, in the exchange rate. I think for you that for the one of you that work with China, for example, with suppliers in China, you felt this as well, that the strengthening of the dollar last year had an impact, of course, on the prices there as well. If you were paying in dollar and that your supplier needed to change the dollars, for example, to their local currency. So also what we see is Europe, the banking, the environment is quite competitive, quite developed. So most of the companies here have accessibility to tools to hedge their exposure through a forward, through options, to TARFs, for example, if we go to really complex products. So this most of the time is missing in more exotic countries, if you can say, more exotic currencies, if I can say so. So the supplier doesn't have always the possibility to hedge its own exposure. So there as well, if there are a lot of fluctuations, they will need to adjust their prices. Or what they do most of the time is when they give you a price, well, they calculate a buffer to absorb a part of that fluctuation in the currency. Of course, as you all know, prices can go up because of the adaptation or because of buffer. But if the exchange rate move, for example, in the advantage of the supplier, well, he won't remove that extra buffer because he's also winning on that, of course. And also, yeah, I said it in the beginning, converting locally, then I mean in Mexico, for example, can be more expensive. It depends, of course, on the conditions with the bank locally, but it can be really expensive for a supplier to exchange a hard currency in his own market. So most of the time we see a win-win situation for the supplier and for the importer. I think for the supplier working in his own currency, well, is the ease of use. I mean, if he needs Mexican peso, well, being paid in Mexican peso is easier. He has also some price stability because he doesn't need to work with the buffer and take the risk that the exchange rate will move against him. Okay, he will not lose if the exchange rate moves for him, but price stability and margin stability is I think the most important. And then yeah, he doesn't need to continue with those buffers, like I said, which is also sometimes of a hassle. And then yeah, on the side of the Belgian importer, for example, working with Mexico, again, price stability, because the price doesn't need to change every time that the dollar does something or that the exchange rate of the supplier does something, because the risk is covered by the hedge, like I said in the last point, hedging of the entire exposure coming from the importer removes all fluctuations. And also, most of the time we see that there is this buffer that is removed, which gives the opportunity to the importer to buy at lower prices. We do this exercise quite a lot for China, for example, where we see differences up to 4% on the buying side, which I mean, for traders, for example, working on small margins, it's quite significant, and just by changing the currency. So now the other side, and I think most of the companies present today are exporting their products to Mexico. Here as well, we could say that working with the local currency has some advantages. I think entering a new market, if some of you are looking to enter Mexico, for example, doing so with the local currency is actually sometimes easier to find new customer, to find new partners. For example, if you look for a distributor, like if you can price him in his own currency, it's easier. I think we all like to pay in our own currency. It's just easier. It's something that we know. It's comfortable. If you work in a sector where there is a lot of tenors, for example, that have to be put, yeah, well, it can be a leverage in the negotiation. You can say, okay, I can give you pricing in Mexican peso, but then I take a bigger margin, for example, because there's an ease of use for the client, of course. And then also from your side, it can allow you to increase your own margins by selling your products immediately in the currency of the market. And why is that? I have a small example to clarify that from one of our clients. Our client is a Flemish service provider, actually, selling in Mexico, billing through euro invoices through their online platform. After a comparison, we compared the cost for the Mexican client to pay in euro, because they paid in euro through the platform, and it was quite high. It was almost 4% that the client had to the Mexican client had to pay to buy those products. I mean, conversion costs, transaction fees, all adding up. We proposed to invoice in Mexican peso, and the Flemish service provider starting doing so with a higher margin of 3%. So it took a higher margin of 3%. So the Mexican customer was actually pretty happy, because he paid 1% less than in the past, than the euro price, and here he could just pay in his own currency. So the customer was pretty satisfied. The Flemish service provider had only 1% cost on the exchange, on the transaction fees and everything covered. So it makes that he had 2% extra margin on the same product just by changing the currency. So also the Flemish service provider was very satisfied. And I mean, okay, there is some more exchange risk maybe for the Flemish service provider. Why? But by working with, of course, a forward contract, that could be removed as well from the situation. So I don't know if any one of you had some question about working with the local currency, or else I give the word to Emil that's going to give you some more information about the market expectation on the Mexican peso and the different currencies.
All right. It seems like thanks for the thumbs up, Rodrigo. I see that all the attendees are quite smart. They followed everything that you said, Jonathan. So before I jump into the market expectations, I would just quickly like to preface this by saying that eBRE does not have a big crystal ball in which we can see the future. Everything that you're going to see here are obviously simply forecasts. So do not take this as investment advice, just to give you a little bit of an idea of which evolutions we might see in the Mexican peso in the coming year. What are the risks to the upside, risks to the downside? And if there are obviously any questions at the end, there will be some more time, obviously, for you to ask something. I will do my best to answer all of the questions that you have. Unfortunately, our chief market analyst, he was supposed to be here, but in the end could not join because he had to take a flight. If actually we're right on time, he should already be up in the air somewhere. But if there is a question that I cannot answer, I will make sure to relay it to him, and he will give you a satisfactory reply. So before I'll jump into what we're expecting of the Mexican peso in 2023, we first have to take a quick look at the previous year and see what made the Mexican peso outperform its peers. So as a quick overview, most of the Latin American currencies had a quite good year in 2022. 2021 was a rather poor year for most currencies, but in 2022, a lot of Latin American currencies were able to bounce back. Among them, we had chiefly the Brazilian real, the Peruvian new sol, and the Mexican peso as its top performers. The reason for this bounce back is for the Brazilian real and the Peruvian new sol was mainly the elevated commodity prices that we saw. As net exporters of commodities, they benefited quite a bit from this. As some of you may know, Mexico is a net importer of commodities, so it had less of a benefit through these elevated prices. However, Mexico did benefit from quite high and positive real interest rates, which means that Mexico, or the Mexican peso, was also able to perform quite well in 2022. How well? Well, you can see the figures there. We started the year of 2022 with a USD MXN rate of 20.36. Today we're trading around 18.50. So we're seeing an increase of about 10% here. And compared to the euro, the Mexican peso did even better, starting at 23.17 in 2022. And today we're trading at 19.70, which is an appreciation of the Mexican peso of about 15%, which overall is quite impressive to see that amount of appreciation in just 12 months. And what made the Mexican peso outperform these two currencies? Well, the first reason is that the Mexican peso is seen as quite attractive from a carry trade perspective, meaning that in risk-on periods, so when the market is seeing a risk-on period, usually we see that the underlying carry trade currency, in this case the Mexican peso, tend to rise quite sharply. Secondly, we also saw that Banxico, the Mexican central bank, has been one of the most active emerging market central banks in the world. It has been raising interest rates quite dramatically since this summer, obviously in reaction to the high inflationary pressures. But this has supported the Mexican peso quite a bit. Other than that, we also saw quite a strong recovery in the services sector after the pandemic in Mexico. And on the industrial side, on the industrial production side, we also saw a very solid performance, which was also driven in large part by strong US demand. So all of these helped support the Mexican peso in 2022. But now on to the future, on to 2023. What can we expect? Well, we're going to divide it into two parts. We're going to look at the peso strengths and the risks to the peso. What's one of Mexico's greatest strengths? Well, we have positive real interest rates. For those of you that are not aware, the real interest rate is the difference between the nominal interest rate of a currency compared to the inflation rate. So in Mexico, this is positive. For most of us in Europe, we're not really used to positive real interest rates. I believe that we are currently at a negative 7% real interest rate here in Europe. Kathleen, I see you have a question. If you don't mind, I'm going to answer it at the end of the forecast, but I will definitely give you an answer right after. So yeah, real interest rates, definitely one of the peso's great strengths. We also have a relatively low debt to GDP ratio in Mexico. Not to mention that the latest data that we've seen come out about a week and a half ago have shown that both the headline inflation and the core inflation in Mexico have surprised to the upside. More inflation usually means more increases in the interest rates, which then also translate into a stronger currency. So this has also been quite positive for the Mexican peso. And because of these this strong data that we've seen the Central Bank of Mexico take a very hawkish stance at its meeting in February on the 9th of February. So overall, we can be quite bullish on the Mexican peso for these reasons. However, there are also some risks to the downside here. First and foremost, while GDP growth has been still positive for the last quarter of 2022, when compared to previous quarters, it has been losing momentum. So economic growth is still increasing, but it's not increasing by as much as previously. So we'll have to see what the first quarter of 2023 brings. If we see a return to what we saw before, we'll definitely see the Mexican peso gain some more ground. However, if we see it taper off a little bit more, then we're definitely going to see the Mexican peso weaken. Other than that, we also have the Mexican peso's hiking cycle. The market is pretty sure that we are going to see the end of the hiking cycle before the end of this year. There is not that much more room for more rate hikes in the view of our analysts. And one of the more indirect risks to the Mexican peso is that Mexico has a relatively low exposure to China. What do we mean by this? Well, about a month ago, China has officially reopened after many months in COVID lockdowns. China reopening has been pretty well to the global economy, but since Mexico has a relatively low exposure to China, the leg up that other countries and Mexico's peers will get will probably be a bit higher, and they will be able to benefit more from this development compared to Mexico. Another indirect risk to the Mexican peso is the decline of geopolitical turmoil. What do we mean by this? Well, this mainly refers to the war in Ukraine. If we see that the conflict will temper, if we are seeing that we're going to maybe towards a peaceful resolution of this conflict, we are likely to see the Mexican peso depreciate also a little bit, because the risk-off sentiment in the market is what helped the Mexican peso gain ground when compared to the US dollar, and especially when compared to the euro in 2022. So it's definitely something to look out for. And then the final indirect risk to the Mexican peso is, of course, a possible slowdown in the US economy. As Mexico's biggest trading partner, if the US economy slows down, we're likely to see lower demand, and then well, as the US goes, so will the Mexican economy to a small extent. So these are what we're foreseeing for the Mexican peso in 2023. Since most of you, if you're working with the Mexican peso and you are converting, you're probably converting it to either the euro or the dollar, I figured it would be a good idea to also quickly discuss some of the weaknesses and the strengths of the euro and the dollar for 2023. And after that, we will move on to some more hard figures and Ebury's forecast and just the market forecast in general for the coming quarters. So what are we expecting for the euro and the dollar? Well, the dollar first up, which weaknesses are we seeing? We are seeing that the disinflationary process in the US has already begun. The US Federal Reserve was one of the first central banks to start, or one of the major central banks to start hiking the rates. Its monetary policy has so far been relatively effective, and we're already seeing that they are getting a grip on their inflation. So we are less likely to see more rate hikes in the future. In fact, we are likely to see the end of the US's hiking cycle by the end of the summer. Additionally, we are also seeing that the market is already pricing in the chance that we are going to see some rate cuts in America before the end of this year. What does the US have going for it? Well, it's definitely not without its strengths. Those of you that follow the economic data out of the US will have undoubtedly seen that the CPI data, which is the US inflation data, has surprised to the upside. And we saw the NFP report, which are the non-farm payrolls. This is the amount of new jobs created in the US. This data came in phenomenally above expectations. So we're definitely seeing very strong activity still out of the US. And we are also very likely to see a much more hawkish Fed in the coming months, due to the fact that the vice chairman of the Federal Reserve, Lael Brainard, has earlier this week accepted a position within the Joe Biden administration. She was one of the few doves and one of the few people cautioning against an overly aggressive rate cycle, or rate hiking cycle rather, by the Fed. Now that one of those voices is gone, it is much more likely that the Fed will be more hawkish going forward, especially since we are unlikely to see a replacement for Lael Brainard in the next few months, since they are subject to a Senate confirmation. And given the current climate in US politics, it is unlikely to see a replacement anytime soon. And then on the euro side, which can also be quite interesting for some of you, which are the weaknesses we're seeing in euro? Obviously, the escalation of geopolitical conflict, again, referring to the war in the Ukraine. If it would escalate further, maybe spill over into other countries, we are likely to see the euro lose a lot more of its value, maybe somewhat analogous to what we saw in the year before. We've also seen quite mixed messages from the European Central Bank and Christine Lagarde in particular over the last few months, which has been somewhat unsettling to markets. But on the bright side for the euro, we have been seeing that supply chain issues and supply bottlenecks have been easing. We've also seen a market improvement in the market confidence, and the labor conditions have also started to pick up for within the EU. So there's definitely some positive data coming out of Europe as well, because the ECB has been quite late with regards to reacting to inflation, especially when you compare it to the Federal Reserve or the Bank of England. The euro is lagging quite a bit behind. We only started raising the interest rates quite late, meaning that there is a lot more room for additional rate hikes by the ECB. And we are also very unlikely to see any rate cuts before 2024 in Europe. So all of these things bode quite well for the euro. Okay, so based on all this information, these are the market expectation that Ebury has for the Euro MXN and the USD MXN. So for the Euro, as you can see, we are seeing, or we are expecting, a slight appreciation of the Euro compared to the MXN by 2024. Yeah, I don't think I need to go much further into it. We just covered why. If we're looking to the USD MXN side, you will see that we are expecting 19.50 in basically the next 4 to 6 quarters. This is not because our market analysts have gotten lazy, but it is mainly due to the fact that we believe that most of the risks to the downside for the Mexican peso are also risks to the downside to the US dollar. So we are likely to see a more stable relationship there. I mean, just to give you an example, a slowdown in the US economy would obviously weigh on the dollar, but since lower US demand would also impact the Mexican peso negatively, we are unlikely to see big swings either way when compared to those currency pairs. These are just Ebury's forecasts for the coming year. I've also taken it upon myself to include the Bloomberg forecasts. For those of you that are not working with this platform yet, and I wouldn't blame you because it's quite expensive to get access to this platform. But what you're seeing here are all the market forecasts of the major financial players in the market. So I'm guessing some of you will recognize your banks in this list. We see BNP here, JP Morgan Chase. We have Monex in there, which I think is quite well known in Mexico as well. All of these financial institutions publish their forecasts for the coming quarters, and Bloomberg provides us with an aggregate of all this data. And what's then especially interesting is when you look at the median or the mean on top there, you can use that as a, let's say, the average of what the market is expecting for a given currency pair. So what we're seeing here is a slight appreciation of the euro compared to the MXN over the next few quarters in 2023. So, you know, from 2074 in the first quarter of 2023, we're looking to end the year around 21.55, which is quite a bit above where we are today, which is around 19.80. So I think Ebury's expectations there are somewhat in line with the market's average. And then maybe even more important, the USD MXN expectations. Again, if we look at the median and the mean, we are seeing a somewhat stable evolution, peaking in the third quarter of 2023 around 19.60, and then by the end of 2023 going back to around 19.50. I think the main focus point here should be that we are currently trading quite a bit below the expectation of the first quarter of 2023, with the spot rate being at 18.56, and well, most of the market average expectations being around 19.30. So yeah, these are the hard data. These are the expectations of the major banking players. We've come to the end of our presentation. So now I would like to invite anyone that has any questions to send them to us, or you obviously are free to speak out loud. And then I will already start answering Kathleen's question. I see here you asked, as an example, I would like to know what would be the typical hedging costs for euro to pesos over a 6-month period. Well, to give you a brief answer on that, Kathleen, like most financial products, it will depend on your relationship with the bank and what kind of hedging product you are using. There are things we like to call plain vanilla products, which would be a simple window forward where you have one rate to convert euros to Mexican peso over, let's say, 6 months, where the rate does not change. But you also have much more complex products. We have FX options, TARFs like Jonathan mentioned earlier. So the cost of the product will mainly depend on, well, first of all, your relationship with the bank, and also what type of hedging product you are using. The more complex, usually the more upside you can achieve on a given forward contract. However, more complexity, more flexibility also usually comes at a premium. So if you are choosing for a more complex products, make sure that you have ideally maybe an in-house person or a treasury team that can manage these more complex structures. I hope that answers your question. Does anyone else have any questions for us? Okay, then I am assuming everything was clear to everyone. If you feel like you've missed your chance, or maybe you were too shy to ask it in public, not to worry. We are available. You will get all of our contact information from either Kathleen or Morgan. So if there's any questions, please do not hesitate to reach out to us. Oh, Rodrigo, you've raised your hand.
Yeah, thank you. I have a brief question, and it's regarding about the risks or any good things coming about nearshoring in Mexico. As you well know, a lot of Chinese companies mainly are starting to arrive into the north of the country. But I'm not quite sure if you are ready to address that topic regarding the exchange rate that might have some movements, slight movements or dramatic movements in the next months due to this situation. Do you have something there?
Personally, I have not seen any information regarding this, that this would be a major factor in on the value of the peso, mainly because, as we stated earlier, the exposure of Mexico to China is still quite limited. And also, usually the main exposure that most Latin American countries have to China is commodity exports. So unless Mexico suddenly, or Mexico's trade balance suddenly shifts heavily towards becoming a net exporter of commodities, it is unlikely that the introduction of Chinese companies will have a major effect. Obviously, I don't want to rule anything out, but currently, yeah, we're not expecting much.
Okay. Good. Thank you.
All right, thanks for your question, Rodrigo. Any other questions? That is perfectly all right. All right, I think then we are going to round it off here, unless my esteemed colleagues from the BMBC want to give us maybe a few parting words.
Yes, like thank you very much for this. Well, for me at least, interesting setting as well, to make us aware of certain risks and how we can tackle these, and also to give us some prospects about what to expect for the coming year. We understand that prospects is not an accurate science, but at least it gives us some kind of a idea, and I think that helps a lot of us. So yeah, I want to thank everyone for connecting, and we hope to see you again very soon.
Thank you very much, everyone.
Thank you, Emilio and Jonathan.
All right, have a very lovely day, or enjoy the rest of your afternoon for those that are in Belgium, and then have a blessed weekend.
For you as well. Thank you.
Thank you all. Bye.
Bye.
Thank you.